Let's talk to Tim Harrison. He's the head of wealth management at Linear Investments. Very good morning to you, young Tim.
Good morning.
Right, obviously a lot going on in the financial markets, whether it's technical, fundamental. What are your thoughts for the week ahead?
Well, where do we start?
Where do we start?
Over the weekend, obviously the Italian election, the German news overnight with regards to the SDP. Then you've got obviously the US, you've got the Brexit scenario. So there's a lot of stuff going on the political landscape, which is kind of bleeding into the equity markets. Obviously, the markets have been very, very tentative now for probably the last 6 weeks as to whether or not they want to continue their progression higher, or we do want to take stock and see where we're at. With these political headwinds obvious and current, it would appear that investors are shying away from taking on too much risk,
Yep.
which is the rational thing to do. So finally, we've got some rationality in the marketplace. But you are sort of seeing, again, M&A take the lead. Over the weekend, AXA going for XL Group in a significant premium, which suggests that there is still some money to be made. So M&A bankers out there are still going to be employed into Q2 of this year.
Okay, so in terms of asset allocation, you're managing money. Are you basically taking less risk per se?
We've got more positions on than we have done historically, but they're smaller positions because we are, to be quite frank with you, not sure on where the market goes short term, and therefore we don't feel the need to be fully exposed and very stock specific. We are sort of in a position where if we do see the markets roll over and continue their pull back, then we want to be lightly exposed so that we don't damage the growth that we've had over the last 6 months or so. So it's a case of waiting and seeing, and it's a state of transition for portfolios. But we're not fearful of the markets per se, but we are changing our allocation into areas that are unloved and potential growth opportunities.
And finally, in terms of companies reporting this week, do they take the back step, if that's the right word?
Well, I would suggest so at the moment, yes, because you've got a lot of political headlines which are much more important. That being said, you know, the Italian election, the Italian index isn't down dramatically this morning. Europe seems to be relatively well bid. So it's a case of wait and see over the next few days in terms of companies reporting. I suppose you've got the major insurer Aviva reporting, which may be interesting, especially given the fact that there's been some M&A this morning with AXA going in for XL Group. So that could be an interesting one to see what their growth forecasts and their opportunities are. But at the moment, it's a case of the European headlines political risk is containing us for now.
Tim, on that note, thank you very much indeed.